Hey everybody, it's Chris Small, the owner of CMS Law Firm. We do estate planning, we do probate, we do it well. And today I want to talk to you about inheritances and taxes. Before we get to that though, I want to remind you, if you have questions about this or anything else related to estate planning or probate, and you want to talk with us over the phone for free, you can do so by going to cmslawfirm.com. Okay, inheritances and taxes. This is something I get asked about a lot. I guess I could have put a little caveat on here too. It has to do with trust, like income taxes and trusts and taxes. Okay, so let's start at the beginning. Generally, there are no taxes on inheritances really anywhere in the U.S. as far as I know. If you are in a different state than Washington, please go and check your local state rules before you make any action or before you do anything. That's my little disclaimer, but I'm 99% sure that there are no inheritance taxes anywhere in the United States. There are some estate taxes in some places, not inheritance taxes. What that means is if I die and I give one of my kids $1 million, when they get that $1 million, they typically are not going to pay any tax on that. Okay, they're just going to get it, almost like a gift. Okay, now there's really one situation where taxes would be owed on an inheritance, and that's because they're baked into the inheritance. That is really pretty much retirement accounts only, okay? So when it comes to retirement accounts, they are typically paid in without having paid tax. So whenever a distribution is made on those accounts, on those retirement accounts, whether it's the person that created the account and deposited the money or not, those distributions are going to incur income tax. The reason is no tax has been paid yet. So when those distributions are made, tax has to be paid by somebody. The money's coming to you, you will pay the tax, okay? The good news is, I guess if there's any, is that typically the income tax will just be paid out of the distribution according to whatever income tax bracket you personally fall into. So they don't take income tax based on the person that died. They take it based on your income taxes for that year. So if you are going to be taking distributions from retirement accounts that you have inherited, make sure that you think ahead about your tax liabilities and plan accordingly, if you can. Some people, you're just gonna be stuck having to pay some income tax. All right, so that's the second thing to think about. The third, I guess, thing that you may be paying income tax on technically would be income that is created by some inheritance that you received. Here's a couple different things that are examples. Example number one, if you are given a rental house as part of an inheritance, and then you rent it out and you receive rent for that rental house, the value of the home itself you will not have to pay any tax on. In fact, you will get a step up in basis and you will not have to pay capital gains tax even if you sold the house. But the income, the rent that is generated by having renters in the house, you or someone will have to pay income tax on that because it is income that is derived from the asset, okay? Now, the same thing apply. Oh, another way that you may have to pay income tax. Let's say you had like an installment sales contract that you inherited from a family member. I was just talking to somebody about this today. They sold a business, and the terms of the business are you're going to pay, $5,000 a month for 10 years. Okay, that's the deal. At the end of the 10 years, that's up, but that's an installment contract. Okay, that installment contract can be inherited by someone else. Typically the present day value of that contract you're not going to pay any taxes on, but as that money comes in, you'll likely have to pay some income tax on that because it again is income derived. That one actually gets trickier because you can discount it to present day levels and do some other things that if you're trying to be sneaky, again, consult your tax professional if you inherit an installment sales contract to try to figure out what you can do. The other thing to consider is when it comes to irrevocable trusts in particular, those irrevocable trusts, if they create any income, whether it's a distribution from retirement account or any of the other things that we talked about, will typically distribute that income out to the beneficiaries, and then the income that income derived and distributed will be taxed at the income level of the person receiving the distribution. Very much similar to what I talked about before, but slightly different, okay? Hopefully you are not confused. Hopefully this made a little bit of sense. The main point though, the gist of it, to go high level again real quick, pretty much all inheritances that you receive are not going to be taxed by you, the inheritor. If you get a house, if you get cash, if you get stock, you're not going to have to pay a tax when you inherit those things. If income is derived from those things, or you are taking distributions from an inherited retirement account, you're likely going to have to pay income tax on the income that is generated by those inherited assets. Okay, hopefully that makes sense. If it did, great. If it did not, let me know. You can leave a comment, maybe hit the like button or the little heart button. I need some love. If this made sense, if it is helpful, if you are someplace that you can subscribe and you don't want to miss any of these in the future, hit the subscribe button. And if you have questions about this or anything else related to estate planning or probate, and you want to talk with us over the phone for free, you can do so by going to cmslawfirm.com. All right, I am, as always, Christopher Small. I'm the owner of CMS Law Firm. We do estate planning, we do probate, we do it well. Thank you for your time. Thank you for your attention. I appreciate you, and I will talk to you again soon. See ya.